What's up, my devil? Sensei Tutum here with another video for you. So this week we're going to switch up the trading theme. We did a trade scouting exercise last week. That's going quite well. We'll probably touch back on that next week. But this week I want to focus on the more traditional style video here at Trade Devils. In fact, I'm going to hit the Bitcoin. I'd like to leave that generally to Sam, you know, for those Friday videos that you guys love so much. Don't worry, you're going to get that. But I've changed my macro a bit recently. You know, we have no crystal balls here, and the macro has to adjust every once in a while, right? It's not very often that happens, so I felt it was worth a video. I updated the members with that count earlier this week and told them, you know, that I would do this video on that to explain it more in depth, because sometimes it requires explanation, right? So just in order to update that, it's of course down more this level of macro. We're looking at the entire price history, at least that we can chart here with the brave new coin liquid index for Bitcoin. And I just want to walk you guys a little bit through how my macro has evolved in the last couple of years. And again, you know, it has to change every once in a while. It's changed a handful of times, 3 or 4 times, this being the third or the fourth in that time span. So let's go ahead and take a look. I have, you know, I know a lot of people, many people don't have this as a completed motive to the top, all the way up to the 20K high. I do. Just the way I like to practice Bitcoin, it channels, despite the kickoff wave, it channels fairly well. It follows slope guidelines. It follows just general basic obvious swings. 1, 2, 3, 4, 5 swings, right? So to me, I'm quite happy to call this a completed motive wave to this point. Now, once that happened, we were expecting a wave 2, right? And we got what is clearly a nice 3 wave off the high. And then we certainly turned around and got moving. Now, at the time that we were putting in this low, I was under the idea that this was just not big enough relative to the rest of the market, right? Or I'm sorry, to make a wave 2 of adequate magnitude. But if you do look at, for instance, if you were to put a channel on this, let's log channel on this to project the fifth from here, of course it would look much different arithmetic. We barely are inside of it, but we get quite external, right? So we're external. Channels don't necessarily work on such a large scale all the time, you know, especially in a market that moves like this one. So we did break external to that, but the time relative to the rest of this was quite short. And at the time that we made this low, I thought that we must probably be going multiple, right? So completed zigzag, and then we would potentially put in an X wave and another zigzag down. And I think at the time I might have had like a $1,200 low, and a lot of people I've seen critiquing those that had that target. I mean, in hindsight, yeah, that's nice, guys, but at the time that seemed what would be maybe most likely. However, things have changed. 2019 was a thing, right? And this wave, and I've been over it, I've had videos on it, so I don't want to get too in depth in it now, but this wave is a clear motive swing. We can zoom in quickly and talk about that, because that's important for the macro, right? If this is a motive wave, 1, 2, 1, 2, 3, 4, 5, 3, 4, 5, clear, no overlapping waves. This is as textbook impulse as you will ever see. It's hard to find textbook patterns in nature or in the markets, but they happen, and this is one of them. It's beautiful. So this is a textbook impulse, and I was at that point, once we saw this wave complete, I was then at the strong idea that we have a completed 1 wave, completed 2 wave. So that this is a motive wave that is going to continue the trend forward, and that this would not create a new relative low. Now, a lot of people were on board with me. I say people, Trade Devils members, people I know in our circle. I don't look around Twitter, but I'm sure that there was a lot of other people that also agreed that this would get multiple and come down further. However, not a lot of people stuck with me on this being 5 waves, and I still see this wave out there as a 3 wave, and it bothers me because this is not a corrective wave. This is a motive wave. Very important, right? So the entire time that this was coming down, including this dilly straight down, I was adamant it would not create a new relative low. Could it have done that and proved me wrong? Of course, because these are not, the laws of nature. This is not, physics. This is not calculus. These are not. This is the market. This is gauging fear and greed, and humans are too complex to have, a rule that you can think will never be broken, right? So could this have proved me wrong and that this did end up being corrective? Sure. That's the way, if you're an Elliottian, that's the way you have to look at it. If you're sure that this is a motive wave and then it breaks low for, 2B goes beyond the start of the A or the 1, you just have to chalk it up that you were wrong. Not that, well, no, this is 5 wave and the theory's fucked. Well, you could do that, then you just don't practice Elliott, right? So if you're an Elliottian, you just have to assume in cases like that you're wrong. But when you have such a textbook pattern, you stick to your guns till invalidation, and I did just that. It helped me to catch this bottom, which was nice. But once we did that, and this was a motive, and this came in down, then at that point, you have another 2 or a B. And at the time, I thought that we would have the 2 there, right? I thought this would be a 1, 2. So the macro changed midway through here somewhere that this was then impulsive, right? So that's one change on the macro. And then we did not change here. Just run these off over this way. Take them down a degree. Primary. Go yellow. So we didn't change macro there. Then the move off the low, we were expecting to be an impulsive. However, this is quite atypical. This is ugly. So at the time, I thought we might possibly be putting in then what would be a B or an X of some sort, that we would come back down and make this a giant sideways relative to this. So that was... But it wasn't, I never made that my primary. I had 2 counts the entire time. If you go back and look at the Bitcoin Friday I did when Sam was out of town, you'll see I talked about 2 counts. So I was always at this point open. I was thinking it should be impulse and our motive off the low, but it wasn't presenting itself as such. It's very atypical. So what I then... At the last time I did a Bitcoin Friday video for you guys, I told you that at this point we were, let's just roughly do this. We were around here. We may have just started the decline, and I said that there was 2 options, that we had a 5 wave move in and that we would come down, and then we would either break external of this and create what would be a 2 or B, depending on the situation, but I would say most likely at that point contextually 2. And you could lock in the bull market to the moon, and that'd be great. However, you could also go up, remain internal, go up, and create a 1, 2, 3, 4, 5, 6, 7 swing move. And a 7 swing move is 3 plus 4. It's basically a corrective with an extension. If that doesn't make sense, you gotta come study and learn the theory a little bit. But essentially, it would have been potentially a corrective move to here, and then that flat scenario that I was talking about could be in play, right? And can you rule that out now? No, you can't. But I'm actually latching onto a primary, and it is a bullish one, and it is neither of these 2 scenarios. So now we're switching for macro for the second time. So we have switched the macro twice. So this is not even 3 or 4. It's just this 2 switches. So those were my 2 options at that point, and that was primarily because of, let me see if I have a better chart to talk about now. Here, this one. So that was primarily because of this triangle. This was a beautiful triangle. Saw this playing out in real time. not only shared this with the members, shared this with you guys before breakout on Twitter. Anybody that wanted it could have had it and played it. I think at the time a lot of people thought it was going down to the dirt. Not the case, didn't happen, and as you can see, we've gone up quite a bit since. So because of this triangle, triangles are great to anchor your account, and I won't get into exactly why, but basically they're very good anchors of account. And that's where the idea of that if we didn't come down external and create a 2 and went up, that we would have a 7 swing corrective wave up high. However, I've recently changed my thinking about this being an inadequate 2. Just like I had changed my thinking back here on this being an inadequate 2. Oh, by the way, what I wanted to show you before I switched to this about also changing it to seeing the 5-wave move up and then accepting. Let's go back to the BLX chart. Seeing the 5-wave move up in 19 and then accepting this as a 2. You look at it without the logarithmic on. People get so attached to logs sometimes that it can be a detriment. Look how big it is magnitude-wise relative to all this. It's an 85% price drop. It's inadequate. So it's much more adequate than the one that I'm about to try to sell you. So let me go over to there. My thought is that this white 2 is actually a 2-wave. It is very shallow, but look at the impulse. There's no extended wave, so to speak. It's barely a valid impulse with the length relative of 1 to 3 to 5, right? But it does fit as an impulse. No extended wave. And as we know in markets, I can go back and show you hundreds, thousands of examples of very shallow 2 waves that then go off. And not just on Bitcoin, on any chart. We obviously have examples of very deep waves, but in very bull markets, you could see examples of very shallow waves. Very shallow, very shallow. 2019, great example, right? So that's what I'm having. I'm going to go with here. So let's go take it out of log. Makes that look a little better, right? But that's not. We're not trying to make it look good. It's just accept it or don't, kind of. So one thing that's important here is if we draw the channel, the final channel of this, what I'm saying is a 5-wave motive, 2 to 4 low to 3 high. It does a quite decent job of projecting that 5th, right? And then we do make an external move. It's very shallow, but it's external. It just barely, but it does make an external net retracement of, is it even in 236? So it's between 236 and 382. And actually, if you go back and look on that BLX chart, that's not an uncommon. It's not an uncommon depth retracement in a bull Bitcoin. So of course, if you went logarithmic, you don't even get 236 if you're log, but not worried about log, right? Not for this look. So yeah, that's basically the change. Is that I'm calling this an adequate 2. So this move here that we're finishing at some point, I'm not going to get into the weeds on that too much. I'll talk about it a little bit, but I have us finishing a 5-wave motive in here that will then be the 1 of the 3. And when it retraces, this will be the 2 of the 3, and then boom, the 3 of the 3 that will take us well beyond all-time highs, right? And then onward and upward. This is just, keep going. So, I'm quite bullish at the moment. Now, I feel like this has gone on quite a bit higher than expected. FOMO's kicking in. That's the way that it goes. So I'm just kind of in wait and see mode, waiting for this to drop, waiting for this to finish. I think we're getting close, so be careful if you're long. But if you're long, I'm not telling you to sell. You have to make your own determinations there. This is the count that I'm throwing on that final 1 wave of 3, right? So 1, 2, 1, 2, 3, 4, or I'm sorry, 1, 2, 3, 4, 5, 4, weird 4 in here. I know this was all very strange. Another leading diagonal, 1, 2, 3, triangle 4, 1, 2, 3, 4, going up for a 5th. So yeah, this has been kind of, this market's been wanting to look toppy. It's been wanting to top, and it just hasn't. So it just keeps going. And when it's like that, you just kind of got to go along for the ride and not expect highly probable outcomes, right? So could it end before here? Sure. Could it keep going after there? Absolutely. But I do want to show you a few things. Let's see, is it this one? No, I don't think this is the one. Oh, yeah. Yeah, it is. So let me show you a couple things on this chart. So just a few geometry tools. We've got a shift, and I'd say this to you guys all the time. I almost exclusively use standard pitchforks, but in a for a longer term trending market, I do find the shift to be useful. We have a shift pitchfork here, shift pitchfork here, standard pitchfork here, wicked off the all-time high. We just have a lot of geometry overhead resistance coming up. So do we get to the meat of all this? I'm not sure, but if we do, as you can see, just using these larger geometry tools, we didn't have a lot of resistances within here. But these have all shown to be pretty good, pretty relevant in the markets. Strike there. And I always say I love a median that's relevant before you finish drawing it. This is an example of that. I got a little bit of an example of that here. And then, of course, this standard fork, which are my favorite. You see the examples of that because all these touches were before you even finished the draw there, even that one. And then, of course, since we've gone through, very relevant. So, as you see, we have all these medians coming into very oversold, divergences on multiple time frames, high time frames especially. And that doesn't necessarily indicate how deep the two will be in any sort of way, but it just shows you that we are probably going to be retracing here in the not so distant future. So just wanted to show you that. And let's briefly touch on what some of the other thoughts of people I respect that I talk to, of what their thoughts are. I see a lot of people, and I would say the most popular is that somehow this is a motive wave finishing here. I think the subdivision of that's terrible. It would mean that this triangle is an internal lower degree 4, like the 4 of the 3. It's the biggest, most dominant swing in the move. I think that's just probably wrong. That's where I got the idea that this should be finished, because, and then that would also, that idea with triangle aside, it would be that this is an extended fifth, right? Because it would be by far the longest move in all of it. And then let's just say, I guess I would say 3 to there. So we're already, take it out of log for this. Oops. So we're already at what would be considered the most probable length for an extended fifth right there. However, if you look at the volume, look at the volume here. Of course, at the whenever a bear market's ending, you're going to have super high volume, or generally before the market changes direction. And then lower volume here would be the third highest volume in this whole structure. Still would be this third. Then you get your forward declining volume, a little bit spike on the fifth, and then drops. And then it's still not that high. In an extended fifth, you expect to have expanding super high volume. We don't have that. This is going up on pretty low volume. So that means that there isn't a whole, basically it just means that nobody's selling, probably. A lot of buying going on, not a lot of sellers. So that's probably where that's coming from. That's that FOMO kicking in, right? So like I say, FOMO, who knows? It could go forever. But yeah, it just isn't fitting the characteristics of an extended fifth. But let's just say I am wrong in that this is all one completed motive wave that we're ending up here. The different implication would be that if it's a 1, 2, and then this is a 1, going to put in a 2, obviously you would not expect to create a new relative low to this with a 2 wave. In fact, the high probability retracement would be 50 to 618. Let's just pop the 50 and the 65 on there. In this neighborhood, come back, find resistance support at this level, right? Could go deeper, of course, as long as it doesn't break this low. In an extended fifth, you would expect to swiftly very swiftly retrace to the area of wave 2 of the extended fifth wave. So that'd be here. And so a lot of times you can end the decline there, but you know, it might just be the A and you go up and down. So basically you'd have to retrace all of this. You could get a shallow retracement, except for that extended fifth sort of requires you to have a fairly deep one relative to this move. So my idea is that I'm a buyer in this range. I'm not waiting for down here on a macro perspective. So that's the big difference, and that's why it's important. This whole video basically lines up for that. And I wanted to give you the context of why I think that, because I'm sure I'll get a lot of guff for this 2-wave, but you know what? It's just my idea. I know a thing or two about Elliott, but you know, I'm wrong all the time, just like anybody else. So, but this is actually, I'm making this my primary. So I haven't had a single primary. I told you I had those 2 options previous for a long time, but this is my single primary personally. And whenever this does retrace, I'll be looking for entries at the high probability area of wave 2. And of course, if it's, you know, rapidly declining, like the idea is wrong, obviously things pivot on the fly. So I don't just blindly place orders ever. But I feel as good as I felt about a macro in a while about this one. So just wanted to share that with you guys for the Thursday video. We'll get back to the trading ideas and talks next week, but just wanted to talk about Bitcoin this week. All right, guys, dude out.